development. Let's talk more about the company's growth plan and talk with the management. We have Pavitra Shankar, MD Brigade Enterprises, joining with us. Pavitra, good afternoon. Thank you so much for giving your time to ET Now. Mansi this side, it's a pleasure talking to you. Tell us, what's your take on the quarterly numbers and how do you see the business panning out in the coming quarters?
Hi, thanks for having me. Yes, we're happy with the Q1 results, although we always know that we can strive for better. It was fairly muted from the residential launch perspective. We launched about 1 million square feet of residential space, mainly in Chennai. In terms of the uptake of sales, it is still very good. Customers are willing to pay a premium for the brand and also for real estate projects that are getting launched today in the right size and the kind of design that they're looking for. On the leasing front, we have pretty much mostly leased our entire office portfolio, and that is doing well, continuing to cash flow at increasing rates with all the rental increases coming in. And hospitality as well has done really well. We had also listed our hotel portfolio as of July 31st. So all four verticals, that's including retail, are doing very well, and our outlook is still positive for the coming year.
Hi Pavitra, Ankur this side. I want to understand about the margins front. It is coming in at 25.3% this time, and it's taken the beat if you compare year on year. What is your outlook on the margins front in the remaining fiscal year?
So pretty much it's driven just for this quarter by some one-time costs that we recognized for specific residential projects that came in towards the end of the life cycle of the project. As you know, we follow the Ind AS method, so it's heavily dependent on the EBITDA margins are reflecting which projects are registering and getting handed over to the customer today. Some of the projects that have registered in Q1 are slightly lower margin than Q4. So it's generally due to that mix of EBITDA margins in different projects that are getting handed over that we're seeing this difference. In addition to that, there were some specific costs that got added only on the cost side, so that impacted the margin as well. Going forward, we see especially a lot of our projects that we've launched over the last couple of years have been at substantially higher margins, and we expect to see that get reflected in the EBITDA as well for real estate, and again supported by lease rental and hospitality as we continue to go forward.
Right, Pavitra, talking about the developmental plans going ahead, you have 13 million square feet of residential launches planned over the next 4 quarters. Am I right? How confident are you about absorption rates in current macro condition, and what's your near-term outlook for all of these?
Yeah, so we've been looking at expanding our launches every year. So last year we did around 11 to 12 million square feet of launches. This year that is the plan again. So in terms of absorption, I would say what we saw and witnessed over the last 2 years was really out of the ordinary in the sense that whatever projects were getting launched, we were able to sell them much faster than envisioned or even planned for, and still reach the pricing that we had desired for the project. In the newer launches, we are seeing, because pricing has increased pretty substantially on a unit and per square foot basis, we're seeing customers take a little more time to convert, especially since a lot of the portfolio has moved into the premium segment from the lower mid segment. So these are the reasons why we're seeing it take slightly longer for absorption. But I would also say the rate of absorption is still extremely healthy. We still plan to sell out our projects within 1 to 1.5, maybe 2 years at the max from when we launched the project. And we've already seen that happen for the launches that have taken place in Q4 and Q3 of the last financial year. The movement is very strong and very rapid. But since the tendency is to compare against what we've observed over the last 2 years, it's definitely slightly slower compared to that. But as far as we are concerned, we are able to achieve the pricing that we want for each project's business model. We're able to achieve the full sellout much in advance of the completion of the project. So all those things mean that we're still very happy with the absorption overall in all our markets, Bangalore, Chennai and Hyderabad, and to a small extent in Mysore.
I also want to understand about the hospitality demand per se with upcoming 1700 keys, and what is the on-ground situation which you are seeing currently with festive season now beginning. Do you see that second half will be better than the first one?
Yeah, so hospitality generally, there is the seasonality in the business. Q1 is generally a more muted quarter, and as we get into the festive season, it's definitely expected to do a lot better, especially because a lot of the revenue increases over the last couple of years have been driven by F&B and other, entertainment. So I think in general, the hospitality sector outlook is very good, not just in overall for the industry, but specifically for Brigade projects as well. This is driven by increase in tourism, increase in domestic tourism as well, not just business. And we're seeing overall the willingness to spend and the desire to travel. So as a result, we're confident and therefore planning to put in another 1,700 keys. Our current portfolio is about 1,600 keys that are operating. So very positive about the hospitality sector and looking forward to growing that business.
We hope and wish that the positivity which you are anticipating stays and you focus and fulfill the goals which you have targeted. But one more thing, you have recently acquired a prime Chennai land parcel with a gross development value of 1,600 crore. What's the project timeline and will it target premium buyers?
Yes, we do expect that to target premium buyers. This is a project in Velachery in Chennai, so it is a prime location. We also are expecting to launch that project within the next year. It's heavily dependent, of course, on approvals in Chennai. That cycle takes a little longer than, say, counterpart in Bangalore or Hyderabad. But we're very positive about it. I think there is a lot of demand in Chennai for a premium brand and definitely a premium project from a premium brand like ours. The location is excellent and, we have a really great product that's designed and we'll be looking to hopefully launch that within the next 4 quarters.
Hi, are you also considering any further land acquisitions in FY26 in the remaining months? And more importantly, what will be your strategy for the current fiscal year? Do you want to sustain your margins or you want to expand more?
So definitely we're always looking for new lands. In fact, in the last quarter also, we've done some substantial business development. We've added about 77 acres of land with a gross development value of around 11,000 crores, mostly in residential and 1 commercial land. So, we're consistently looking out for lands in Bangalore, Chennai and Hyderabad. Our focus is on South Indian tier 1 markets and a couple of other markets like Kochi and Mysore. So in terms of business development, we're definitely positive and optimistic in order to replace not just what we are launching every day, but also to grow the overall portfolio. In terms of margins, over the last few years, we've seen pricing substantially increase, and as a result, land values have also increased a little bit. So some of the projects that we were able to launch over the last couple of years, which we have acquired prior to that, those will see extremely healthy margins because the pricing that we're going to achieve now is much more than what we had underwritten. Of course, now the land pricing has also sort of adjusted to match the end pricing to the customer. So going forward, we'll have to see what we can do. I think margins would normalize again beyond that, specifically on the residential side. But that is something we'll keep an eye out for. The shift towards more premium housing has definitely happened over the last couple of years. And in a key market like Bangalore, we've seen that happen not just for premium, but across the board as well. There has definitely been a reset in terms of Bangalore pricing across the board. So overall, I think margins still look pretty healthy. And we'll see that coming in as these higher margin projects get completed in the course of 2 to 3 years from now.
Well said, Pavitra. Just like the pleasant weather of Bengaluru, we hope and wish that the coming quarters for Brigade Enterprises also stay pleasant and even more shining. Thank you so much for giving your time to ET Now.
Thanks so much.